Welcome back to Smart Wave Analysis, your home for real smart money concepts trading education. Let's get into it. Ever notice how price suddenly reverses right at certain levels? Almost like the market knew exactly where your stop loss was sitting. That's not coincidence, that's liquidity. Today we're breaking down two core concepts every trader needs to understand: liquidity pools and resting liquidity. Here's why this matters. Large institutional players can't fill massive orders without enough liquidity available. So instead of trading randomly, they specifically target areas where a lot of orders are already clustered together. A liquidity pool is simply an area on the chart where a large number of pending buy and sell orders are sitting, stacked up together, waiting to be triggered. One clear example is equal highs and equal lows. When price touches the same level multiple times without breaking through, traders assume that level will hold, and they stack their stop losses and pending orders right around it. Another common example is consolidation. When the market ranges sideways for a while, orders build up on both the top and bottom of that range. Now let's talk about resting liquidity. Resting liquidity refers to a major liquidity area that hasn't been swept yet. Take this swing low, for example. I'll mark a line at that level. A swing low is just one example. There are several other levels worth watching too. So what actually happens when that liquidity gets swept? Say price dips below one of these levels then closes back above it. So how do you actually use this? Once you see one of these levels get swept, that's often your cue to start watching for a reversal, because the liquidity smart money needed has just been grabbed, and price is now free to move in its real direction. To recap, liquidity pools form around equal highs and lows, and around consolidation ranges. Resting liquidity is any major level that hasn't been swept yet. Understanding both is the foundation for reading how smart money actually moves the market. In the next video, I'll break down the different liquidity levels in a lot more detail, so make sure you subscribe so you don't miss it.